But what started to happen was that corporate job started pulling me away from my growing family. As my kids started getting older, my passion was being around them, coaching their teams as they started getting into toddler stage and a little bit older. I was doing a lot of traveling, and it was starting to pull me a little bit away from that. And that's where I looked at, hey, what was our original plan when we opened the business many years ago? It was to have not only financial freedom, but freedom to spend time with my family and be around.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week this week. I hope your summer's going well so far. We've got another great guest today. Todd Silance is joining us from up in Pennsylvania, north of Philly. I'll read you a little bit about him, and then we'll bring him in. He is a corporate consultant turned business owner turned real estate investor in just under 5 years. Todd has built a real estate portfolio of over 25 million, 160 units, along with being a limited partner in 450 plus units nationwide. Most recently, Todd is a co-founder, and managing partner of the real estate investment company Summit Capital. Kind of had a twisty, curvy path into real estate, but a really successful one. I thought it seems like you've been successful each step of the way, just kind of doing some different things. First of all, welcome to the show. Thanks so much for joining us today.
Yeah, Lee, thank you, man. Really appreciate having me here as a guest. Looking forward to some awesome conversation today.
Yeah, Todd. We started having a great conversation before we hit record and decided to finally hit record and to start having it on here. But really interested to get even deeper in your story, Todd. So you were doing the corporate thing. I think you and your wife doing the corporate job. Sound like doing pretty well. But at some point you decided it wasn't enough, or it wasn't the right path, or you were kind of climbing the wrong ladder. Something along those lines. Can you take us back to there and just kind of what was going on in your head and maybe between you and your wife?
Yeah, absolutely. You said it there about climbing that corporate ladder. Probably like a lot of people, I went to college and then came out of college, dove right into a corporate career and, working that for a handful of years, but was really getting unfulfilled with that and trying to look for something different. And at the time when I was with my now wife, we were looking to plan our future. And it was, hey, we're working in our corporate careers, but do we see ourselves 20, 30, 40 years from now still doing this? And especially as we tried to plan our future from, we wanted to start a family one day, we knew it wasn't going to be, something that we wanted to do long term. And that's when we started looking for other options. Now, back then, investing in real estate, and whether it was multifamily or single family, wasn't something that I knew about. I didn't read. I see you have Rich Dad Poor Dad behind you. I didn't read that book yet.
When was this, Todd? What year?
This would have been mid 2000s, about early 2006 through 2008. Okay.
Yeah.
Would have been that right around that time frame. But what we did find, and something we looked at, is starting a business. And it was, what were we passionate about, and that we enjoyed doing, but we could also turn into a business that would maybe lead us to the path of financial freedom and lead us from stepping away from our corporate jobs. And that was, we ended up buying an Anytime Fitness franchise. So for those, that may not know what Anytime Fitness is, it's a franchise, like a Dunkin' Donuts or a McDonald's franchise out there, but it was a 24/7 gym. And that was where we said, hey, we wanted to build a business to allow us where we could work for ourselves and potentially build some wealth that we could step away from a corporate career and start a family. So that's kind of where we went. And, being naive, early mid-20s, it was, hey, we're going to open this business, be super successful. We're both going to quit our jobs and we're going to just be living the life. And it wasn't that. It was a grind. It was you're starting a business, and we had to grind every day. We still were working corporate jobs, but now we had employees. Now we owned a business that we had to grow from the ground up. And it took, 3+ years before we were successful in that, which then led us to, open another location in that business. And then finally, my wife was able to leave her corporate career when we started a family. So we kind of achieved that.
Yeah. So you hadn't read Rich Dad Poor Dad. The second book was the cash flow quadrant, which a lot of people talk about. But you understood that part because you were moving to the correct side of the quadrant. Whereas, on one side you can be an employee, right? And that's fine, but you're just trading your time for money. So you have to go put in the time. And then you can be like a business owner or like, I guess, self-employed. That's what the other one is. So you can be self-employed. And a lot of people do that. A lot of people get into real estate and they basically are just self-employed, where like they own their own properties, they manage their own properties. And it's like, you're still tied to that job. Now, the upside, I would say, is potentially significantly greater because you're the owner now. So compared to working as an employee where you're getting paid a set amount and any of the extra profit, it's going to the people up top. When you become self-employed, you're that person. So you get it. So a lot more upside. But what Robert Kiyosaki and others would preach is don't say self-employed and just be a solopreneur. Be a business owner, because then you're going to have other people working to make you money. Not just your time. Now it's other people's time. And the wealthiest people in the world are all business owners. But the wealthiest people in the world, like, they were grinding for years. I mean, ask Zuckerberg and Bezos and those guys, like the guys at Google, like, they were grinding out. It seems like all of them started in a garage, right? And grinding out for decades before they really hit. So you guys experienced a little bit of that, Todd. So I think you have the right idea, and good for you and your wife for seeing that. But it doesn't happen overnight. I mean, real estate definitely doesn't happen overnight.
No.
Building a business definitely doesn't happen overnight. So that was a little bit of your experience, Todd. You guys grinding it out. You got to a point. So it sounds like, though, you did get to a point with those franchises. Did you just own one, maybe two or three, and they started spitting off a good amount of profit for you and your wife, that she was able to quit her job? Can you tell us a little bit about just where you were at that point?
Yeah, at that point, what you said is, being self-employed, like, you still are the business as much as you own that business. But if, like, you don't go into work that day, right, you're not making money. And you see that maybe in restaurants, small business restaurant owners, or like plumbers and those type of jobs. You are the business. But we experienced that, and that's where we saw, because not only did we have some employees working for us, but we still were in the early phases working our corporate careers and then going there afterwards and working the evening in the gym, doing sales, doing PT, et cetera, like that. So that, even though I didn't read those books at the time, it was leading me to going, hey, wait a minute, we need to grow this so we can be, own the business, not be working in the business. And to get to that point. And once we did, that's when we opened a second location. We really saw the growth in the gym. And then from that point, when my wife did leave her job and we started a family, and these businesses were taking off and kind of running on their own, we had the people working in there. I pivoted and went back into the corporate world, or I should say stayed in the corporate world and kind of stepped away from the gym and started going up that corporate ladder a little bit towards, hey, all right, I have these businesses that are doing pretty well. They're providing us some freedom there, but I was going to pursue something I was still passionate at. And that was, I was working in the insurance industry. I was doing performance and learning management, doing consultant work for an insurance company, and loved it. I loved the people I worked with. And real estate, again, still wasn't in my kind of thoughts of, hey, I'm going to invest in real estate. It's going to be, a great investment, turn it into a career. But what started to happen was that corporate job started pulling me away from my growing family. As my kids started getting older, my passion was being around them, coaching their teams as they started getting into like, toddler stage and a little bit older. I was doing a lot of traveling, and it was starting to pull me a little bit away from that. And that's where I looked at, hey, what was our original plan when we opened the business many years ago? It was to have not only financial freedom, but freedom to spend time with my family and be around. Right. And now this corporate job was starting to pull me from that. But one of the great things, I would say, that I don't want to take away from the corporate job, but also, in talking to other business owners that were franchises owners, that's what gave me the introduction to real estate. They started, a lot of these franchise owners, when I would talk to them at conferences that owned multiple Anytime Fitnesses, they owned the real estate that their business was in. They owned a strip center with other tenants. They owned apartment buildings or single family homes. I'd travel and go talk to insurance brokers who, when you'd go meet them or we'd do trainings with them, they owned the building their insurance office was in and had apartments up above it that they would rent out. And the common theme there was, you need to start investing in real estate. So that's where it piqued my interest. And I kind of started taking that right turn into investing in real estate. but not as, hey, let's do this as a business and it's gonna, it's gonna be something great. It was, let's diversify, let's generate my like investments, generate some passive income that maybe one day I'll be able to leave my corporate job and kind of provide, get me back to my original goal to be around for my family. So that's kind of how I got started into real estate.
So when you're talking to these people, Todd, it's really great. And I mean, it just comes back, networking. Networking is so important. I mean, you can take huge leaps and bounds when you talk to somebody. I mean, they give you a cheat code to jump forward a few levels, right? And so that's what you're kind of getting here. What were they saying about, so it sounded like they weren't selling you this massive dream. Like, oh my gosh, Todd, like you think Anytime Fitness is great, like buy real estate. And it's just, hey, we end up buying our building. Is it just, hey, why wouldn't we? Like, why wouldn't we have more control? Let's buy that building. And then, hey, also, it's kind of like another stream of income. Like we're paying ourselves and we're paying off our own building. Why wouldn't we do that? Was that kind of what they were selling you on? You thought, gosh, that makes a lot of sense. We should do that. I mean, just a little bit more of like, what were they coaching you on? Why did they buy the building?
Yeah, that's a great question because that's what, it wasn't like, hey, here's you do this because you're going to make a lot of money. From the business side of things, being in it and being a tenant with our gym business for many years, I always saw you're paying all this rent. They were triple net leases. Mm-hmm. So at the end of the year, you're getting all this CAM reconciliation bills. And I'm like, man, I've been paying this. And now, I'm paying their taxes. I'm paying their insurance. I'm paying the maintenance on it. So a lot of these gym owners were saying, look, if you could be the owner, buy your building, your business, like you mentioned, pays the rent. Plus, you can have other potential tenants in there. And if they're, triple or double net leases, even better for that. So as being a tenant in a business, that's really why I first started looking at well, what if I could just buy the building my business is in? That would be a great idea. Yep. And then it kind of talking to actual, some other investors are on the insurance side of things. They were the investors that were pushing more apartment buildings or, because where at the time the territory I was working in was in the Northeast. So I was in New York, I was up in Connecticut, I was in, upstate New York and Pennsylvania, et cetera. So a lot of them are in the urban markets, like in Philly and New York, where a lot of like brownstones or small apartment buildings where insurance offices were like ground floor, but they were all residential apartments up above. And that was where they're like, listen, you can get tenants or small multifamily, to start to as investment options as well. So that's kind of where then I started looking into it, and you talked about networking. First thing I did was let me find the local meetup, real estate meetup. Yep. I went online, found Your Bigger Pockets, found all that kind of stuff, and just networked like crazy to start and just absorbing everything to learn about it. And then 6 months from my decision to really dive into real estate was when I acquired my first rental property.
That's awesome. Just as you're talking about those other guys, franchise owners, talking about, hey, like, why not own your own building? And like you say, after years, you're like, gosh, I'm the guy that owns this building. Like he's doing really well. I'm here hustling. I'm paying him all this rent right now. I'm paying for all the utilities and I mean, triple net lease, like you're even paying to fix the property up and things like that. Yeah. It just kind of makes me think of like, you and I, most people start out as renters, and for a while you go, why am I making this guy or girl, that owns the apartment building? Why am I paying all them? Like I'm helping them pay off their apartment building. Why wouldn't I go get a house? And you go get a house and you think like, okay, now I can build my own wealth in the house. And I think that's true. I mean, Robert Kiyosaki and some others say, oh, your house is not an asset. I mean, it can be if you do it the right way. And then you might think, as you and I have, are like, okay, we didn't like being the renter. Now we own our own home, or paying off our own home, or you own your, but well, what if we go around and now we're the owner and we've got renters, paying off our mortgage, so like kind of coming full cycle and going all the way around. So really cool. So I love that story, Todd. I guess just real quick, another question for you. Why did you not think, like real estate's cool, but that's kind of a whole nother thing. Like this Anytime Fitness is doing well, right? I mean, you said like you got the second building and now it's kind of running itself a little bit to where now you don't even need to spend time on it. Your wife can handle it. Why not just keep growing that business, Todd? Why not just say, why don't I just try to own 20 Anytime Fitnesses?
Yeah, I would have probably, but we looked at doing that as a business, but it really came back to, if you want to hedge risk a little bit, instead of expanding and everything in there, we said, why not diversify? And real estate would be another way. So I kind of looked at it as like the multiple spokes of that wheel of, hey, you might have stocks and bonds, you have a business, now I can have real estate. And at the time still had a corporate job, like a W-2. Right. But at that point, then it was, once we started going into the real estate a little bit more, that's where I realized my focus would be. And I just loved the benefits that came with it. benefit from not only tax benefits, passive income. You had, tangible asset that can hedge against inflation a little bit there. So there's just so many more benefits that as I started investing in real estate. And then once that started growing and really taking off, again, going back to that initial, if you want to say my why of being with the family and, having that time and financial freedom, I got to the point where it was time for me to move on from my corporate career. I learned a lot from it,
Great. Yeah.
learned, many, many lessons and took a lot away from it, but it was time to really just focus now as I was growing our real estate portfolio and then eventually turned it into an investment company.
Neat. So Todd, I'd love to get into just a little bit more of what you kind of started talking about there, like why you ended up maybe in some ways, at least, really liking real estate better than owning your own business. And it makes me think back to the cash flow quadrant, like talks about you want to be on this side where you're a business owner or an investor. And real estate, now you're definitely a business owner on the real estate side, I would say as well, Todd, but you're also an investor. So that is a little bit different. And you sort of mentioned some tax benefits that come with being an investor versus a business owner. Again, you want to be on that side. So you're hitting both of those boxes, Todd, on the correct side. But yeah, tell us just a little bit about, like, as you got into real estate, what are some things that maybe you liked even a little bit better? Maybe some things you didn't like as well. I mean, I want to hear both, but just kind of some of the differerences between being a business owner with like a franchise, like an Anytime Fitness, versus owning investment property like an apartment building.
Yeah, there's similarities on both, and I enjoyed, and we still enjoy doing both there, because from a business standpoint, I'll say the what we learned from owning a business, from having systems, from having the structure on how you have to operate, and building the culture and a team to run a successful business, to have a manager, to have PT man, have trainers, all the staff that goes to it. The organizational skills you need to operate a successful business translated as we started to scale in real estate. So I was able to kind of take that and then scale it in the real estate starting. And I started small. I started, let me just get some single family homes, my personal portfolio, then, and learn, just like I did when we opened our first location I kind of took those systems, took that, applied it to single family homes. Then I turned the single family homes into a triplex, to a 6-unit, to then a 12-unit, et cetera, and slowly expanded those, those systems there so I could scale. And the biggest thing, thing that I think parallels is the team, because as it's hard to do, especially in real estate, do it on your own. You need to have a really good team and good partners. And that's what we wanted to cultivate as we started to scale, was let's find partners and the people who we're going to team with, make sure we align in our vision, in our values, have the same, we want to create the same culture. That's what we did on our business, and why we became what we feel successful there is creating the culture, taking care of employees, and kind of having that. Well, that's what we did on the real estate side, and then that just helped us grow a lot. And for us, that was the real big takeaways. If we're going to do real estate and turn it into a business, we're going to operate it like our fitness business.
Yeah. Oh man, yeah, great training ground. I mean, just in anything is. I mean, there's so much carryover from anything. Just building systems, processes, procedures, team, culture, all those things that you mentioned. It's so good. Todd, you mentioned when you were getting into the Anytime Fitness, you got one. And it was really hard, and you guys are hustling and you're spending a lot of time. But it was when you got the second one, it sounds like you kind of reached some scale that they talk about, some economies of scale, where now all of a sudden you realize, like, actually my wife can handle this on her own, because it's not, probably there's some carryover between them and maybe enough profit to hire the trainers, as you kind of just mentioned. Tell me a little bit, did you experience the same thing on real estate? Getting a few single families, probably you just have to do it all yourself. There's not enough there to start hiring, a bunch of team members. Did you have some of those same growing pains where you're like, gosh, I'm up to 20 units, but like, it's still not really enough to get somebody in? And was there some points where you're like, okay, finally, I've kind of reached this point where I can bring somebody in, and okay, now it starts to feel like a business where I've got some employees and I'm not doing everything. Yeah. Just a little bit of that growth. Was it kind of similar to the story you told with Anytime Fitness?
For sure. Like 100%, because like you said, I started off in single family homes. And, just quick, funny story. The guy I bought through networking, my very first investment property, single family home, we close on the deal. And literally in closing afterwards, he's like, hey man, it's a great property. You'll love it. It needs a little rehab, because he was unloading it. And I asked him, like, hey, why are you selling it? He's like, oh, I'm selling all my single family homes. He's like, one piece of advice is just scale multifamily. If you can get in the multifamily, that's the way to go. And I was like, thanks for telling me now after I just bought this single family home.
Yeah.
And, it was great advice at the time, but, for me, I wasn't at that point yet. I needed to learn and kind of slowly grow. And his advice was, hey, if you have a single family home, but you have, as you mentioned, 20 of them, that's 20 different roofs, 20 different properties with 20 different water heaters spread out all over the city.
Spread out, right.
And the maintenance, you're going all over the place. And at the time, that's not enough for me to really, I mean, I can have third-party management, but it's really eating away at the returns on it. So you're doing a lot of self-manage or quasi, you're the general contractor on stuff. Whereas if we get a 20-unit apartment building and then another 20-unit apartment or 35-unit apartment building, now economies of scale, that's not 55 single family homes. It's two buildings with the same amount of units, and economies of scale. It was easier to manage. It was, more efficient in ordering of supplies, building materials, renovation materials. Hey, we are going to renovate, like we're building now, the units, the flooring, the kitchens, the baths, all 20 of those units are the same. So I can in bulk buy all 20 vanities, get all the flooring, all the paint, etc., and get, big discounts on that. So for sure, economies of scale, as you started to grow from single family to multifamily, just like the business, you were able to systemize things, and it made things a lot easier.
Yeah. It's really good. So Todd, where do you sit at today? You got a nice portfolio that you've grown that now. So now you kind of have the Anytime Fitness business. Sounds like kind of your wife heads up, and now you head up this real estate business, and you've got a nice portfolio. Now you're raising money, bringing others in, showing them the light, and jumping into some bigger deals. Just tell us a little bit about what you're doing today.
Yeah, for right now, that's what we're doing. I have a company called Summit Capital with a business partner that I met through a great mastermind program there, that our just vision, our values aligned, and we worked really well together. We did two before forming a partnership, to like JV deals together on some larger apartments, just to make sure that we worked well together. Right. But right now, what we're trying to do is, as I grew in the real estate business, I started getting people, other business owners, whether it's franchise owners, started like small in my network there, started wanting to invest, started seeing what we were doing and saying, hey, how can I invest? But I still like running my gym business. Like I still own a small restaurant, or most of the people were like, I still love my corporate job, but I need to diversify. And that's where we started bringing in investors, and then was able, wait a minute, we have an opportunity here to help additional people out. We can bring them in as passive investors in deals, and give them the benefits of real estate, but they can still do what they love. And that's what we do today, is we try to educate our investor base out there on the benefits of real estate, and then provide them some opportunities to invest, whether it's deals that we manage and operate here, or if it's deals that we've partnered with other partners across the country, where we have an opportunity to bring our investors in so they can participate in it as well.
Yeah, really good stuff. And we'll put all the show notes. I'll ask you that in a minute, Todd. What I want to ask you, I always like to ask my guests here at the end as we wrap up. What would you say is a key ingredient for being a successful real estate investor? I'd love, and maybe that ties into, maybe it's the same thing to be a successful business owner. But you kind of have a little bit of both. But maybe one for both. Maybe they're the same thing. But when you think about what it takes for someone to have success as a business owner, as a real estate investor, what's maybe that key ingredient?
For me, I'll speak more for me. What helped was, aligned vision with, for my main partner is my wife here. And we would take time to look at, project into our future, where we wanted to go, make sure we were aligned and on the same path, and then being consistent, but also patient. I always knew, it wasn't going to it's not going to be the next day I'm going to be successful. Yeah. It may take a while, but if I'm just consistent and keep moving towards that goal, staying aligned, eventually you're going to have success. And 100%. Sometimes you don't even realize it, right? Like 8 years, 10 years go by and you go, wait a minute, we were just a mile, way back there. Now look what we've achieved. And we were just consistently moving forward, but being patient along the way. And then just making sure we're aligned, aligned where we want to go. Sure. And that helped us be successful.
Yeah, that's so good. I couldn't agree more. Yeah. You just those tiny little steps. Every day it feels like you're not doing much, maybe week to week, month to month. Doesn't feel like you're doing much, but I mean, that's adding up. And years go by and you realize how much it is, how much you've amassed. And then there's, compounding results off of that, compound interest, compound, growth there, the exponential growth that you're going to see eventually. So you kind of started, because I love how you brought your wife into that, and she's your main partner. That's awesome. Because I always like to ask, what's a key ingredient to making sure that, Todd, while you're growing these successful businesses and getting into real estate, you're maintaining your priorities. So, for you, I can tell that's your family for you. If you're a man of faith, things like that. What would you say is a key ingredient, or what's something you and your wife are doing to make sure that, you're a go-getter, you're a hustler, you guys have a couple businesses now. What are you doing to make sure you maintain those priorities?
Yeah, we would always make sure that alignment, taking time to connect for her and I, and then look at all whether it's our family, it's our personal relationships with family members, friends and family, as well as our employees out there. So we would just make sure we're aligned. We're treating everyone, fairly. We're to make sure, hey, how are our relationships with everybody in the gym business? How's things in real estate? And then how's things in our family with our kids? And we want to make sure all that's aligned, and then look at, okay, where do we want to go? And we're not neglecting anybody, our kids, and just all focused on business. Let's make sure we bring it back to what was our original why. And then as long as we're marching down that path, then we keep moving forward every day.
Yeah. You guys have a set time week to week? Yeah. Just, is there a flow to that when you guys do a certain check-in?
Yeah, it might be corny, but it's our morning coffee. Like we'll sit down literally every day. And if we don't get an opportunity in the morning, it's typically at night. Now in the summertime, we love sitting outside at night and just connecting for the day and making sure, hey, where are we? Where's coming up? And then typically it's about on Sundays before the week starts. We usually go over our week just to make sure, because she has stuff with the gym business and I have things going on with real estate. And then also where our family, like what's going on with our personal relationships, make sure we're aligned and we know what's going to go on for that week. Yeah.
You got to be intentional. It's got to be at the beginning of the week, right? You got to plan ahead, or your week just gets carried away, right? It owns you instead of you owning it.
Yeah, that's a great way. Exactly.
Well, Todd, this has been great. We're going to put in the show notes. It looks like summitcap.com. And then Todd, you can email you at todd@summitcap.com. Looks like, we'll throw your LinkedIn and your Facebook links in there. Those are the best places for people to connect with you, reach out to you.
Yeah, absolutely. We're on social media, on Facebook or Instagram or LinkedIn there. You can reach out to me. As you said, it's summitcap.co actually.
.co. Okay. I figured I saw that and I thought we probably just made a mistake on our end, but no, it's actually .okay.
It is .co there. So I appreciate it. This has been great, Lee.
Hey, Todd, before I let you go, I always like to ask my guests right here at the end, how might my listeners and I be praying for you in the coming weeks?
For me, it's just being, as like I said, I want to be as intentional as I can with my family and my friends.
Yeah, absolutely, man. That's a great prayer. Well, Todd, thanks, man. This has been really helpful. Really interesting to hear a little bit of different story, a little bit different path, get into the franchise business but just, all those things you mentioned, like systems, processes, procedures, people, culture. I can imagine it's so important for any time business, but it's so important for any business. And as you got into the business of real estate, there's some differences, but those things still reign supreme. So it's really helpful to hear that. So thanks for coming on today and sharing that with us.
Yeah, cool. Thank you for having me. Really love the conversation today.
Great. Take care, Todd.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.